You wake up. The alarm on your Apple iPhone goes off. Or maybe it is a Samsung. You stumble into the bathroom, grab your toothbrush, and squeeze out some Crest toothpaste, owned by Procter & Gamble. Or maybe you prefer Colgate. You head to the kitchen, brew a cup of Starbucks coffee, and check your bank balance at Chase or Bank of America before jumping into your Ford or Tesla to drive to work. Along the way, you fill up your tank at an Exxon or Chevron station. It feels like you are navigating a vast, competitive free market, making independent choices every single second of your day. But what if I told you that almost every single brand, product, and service I just mentioned, and virtually everything else you will touch, consume, or interact with for the rest of your life, is ultimately funneling money back into the exact same pockets? The illusion of choice is the greatest magic trick of the modern global economy. We think we live in a world of fierce corporate warfare, where rival companies battle for our hard-earned dollars. But peek behind the curtain of the stock market, look past the colorful logos and the million-dollar advertising campaigns, and you will find a truth so massive and so pervasive that it almost sounds like a wild conspiracy theory. It is not. It is just the reality of modern finance. At the absolute pinnacle of the global wealth pyramid sit a few colossal asset management firms. The titans are BlackRock, Vanguard, and State Street, often called the Big Three. Together, they are the largest shareholders in almost every major publicly traded company in the United States, and their influence stretches across the entire planet. But for the sake of understanding just how deep this rabbit hole goes, let us look at the philosophy and the unimaginable scale of these invisible empires, particularly Vanguard and BlackRock. Between them, they manage tens of trillions of dollars. To put that into perspective, if these asset managers were a country, they would boast an economy larger than almost any nation on Earth, rivaling only the United States and China. They are the undisputed masters of the universe, yet the average person walking down the street barely understands how they operate, or worse, does not even know they exist. How did a handful of financial institutions quietly buy up the world without triggering alarms or anti-monopoly laws? The answer lies in a financial invention so incredibly boring that it perfectly masked the greatest consolidation of corporate control in human history. That invention is the index fund. Decades ago, investing was a rich man's game, dominated by active fund managers who charged exorbitant fees to handpick stocks. Then came John Bogle, the founder of Vanguard. He realized that most active managers failed to beat the market over the long term. So, he created a fund that simply bought all the stocks in the market, matching its performance precisely, and charged almost nothing in fees. This was the birth of passive investing. It was a brilliant, democratic idea. It allowed regular people to invest their retirement savings safely and cheaply. Over the decades, trillions of dollars flooded into these passive index funds. People stopped picking individual stocks and started pouring their retirement funds straight into Vanguard, BlackRock, and State Street. But here's where the democratic dream of passive investing morphed into an unprecedented concentration of corporate power. When you buy an index fund from Vanguard or BlackRock, you get the financial return of those stocks, but you do not get the voting rights. The asset manager keeps those. Every share comes with a vote, allowing the shareholder to dictate how the company is run, who sits on the board, and what the CEO gets paid. Because millions of everyday people have handed their money to the Big Three, these firms now possess an earth-shattering amount of voting power. Look up the top shareholders for Coca-Cola, then look up Pepsi. You will see Vanguard and BlackRock right there at the top. Look at the airlines: Delta, United, American Airlines, Southwest. They are fierce competitors in the sky, but in the boardroom, their biggest owners are exactly the same. They own the banks, the pharmaceutical giants, the defense contractors, and the tech monopolies. They own Google, Apple, Microsoft, and Meta. If you boycott a brand, your money simply flows to their competitor, which is ultimately owned by the exact same group of asset managers. The house always wins. When the same small group of massive investors owns the largest slice of every competing company in an industry, the very foundation of capitalism begins to warp. Economists call this common ownership. If you own both Coke and Pepsi, Do you really want them fighting a brutal price war that slashes profit margins for both? Of course not. You want them to maintain high prices and steadily pump out dividends. Critics argue that this hidden web of common ownership subtly discourages competition, leading to higher prices for consumers. The executives running these companies know exactly who their true bosses are. They know displeasing the massive index funds could cost them their jobs. Corporate America bends to the will of these giants. The gravity of their influence goes far beyond simple economics. These firms are positioned to dictate global policy without ever holding a public office or winning a single election. Mega managers have begun using their colossal voting blocks to push for specific environmental, social, and corporate governance policies. Whether you agree with these policies or not, the mechanism of implementation should give anyone pause. A handful of unelected financial executives are effectively bypassing the democratic process, forcing sweeping changes onto the global economy simply by threatening to withhold capital or vote against boards. They have the power to starve entire industries of funding and dictate the long-term strategy of the planet. The counter-argument these firms offer is that they do not actually own the money. Technically, the trillions of dollars belong to everyday retirees. Vanguard even has a unique corporate structure where the funds themselves own the company. They argue they are simply stewards of capital, bound by fiduciary duty to maximize returns for their clients, and that they use their voting power responsibly. They claim they are not a monopoly, but merely a conduit for the investments of the masses. Yet, the reality of control remains firmly concentrated at the very top. The person whose name is on the retirement account has absolutely no say in how their shares are voted in the boardrooms of the most powerful corporations. The separation of ownership and control has reached its logical extreme. We have built a system where the wealth of the middle class has been weaponized into an instrument of dominance by an invisible financial elite. We are funding our own subjugation to an unelected corporate oligarchy. If current trends continue, index funds could soon own the absolute majority of all voting shares in the S&P 500. We will have transitioned from free market capitalism into a new era of corporate feudalism, where the global economy is managed by a central committee of asset managers. The decisions shaping the future of human civilization will not be made in the open marketplace. They will be made quietly and secretly in the private conference rooms of firms that hold the title deed to your entire life. The invisible hand of the market is no longer a metaphor. It has already bought the world.